Okay, this is my quick 3 minutes analysis on gold, just gold alone. What to expect from FOMC today? I'll target if I'm opening right now. What to expect from FOMC today? So this is gold on the weekly and on the daily. We all know that gold is bullish. I get it because of these what's it called? So if I should label them, just quick, very quick. Gold is bullish because of these falling wedge. If you did to the downside, we see bullish reversal chart pattern and perfectly, reverse from our Q zone, 0.5, 0.618 Q zone. So gold is bullish. We've broken out of that channel. So what is happening right now? What to expect from FOMC today? Let me go to the hourly so that I can drive perfectly well right now. As well as you know, this was a previous support and resistance zone. So we have these previous supports now turn resistance gave rise to this falling image that quick 3 minutes, please. So right now we had this previous support that turned resistance. Now it has broken back again. So internally, this is the fall structure we have. This is a major support. So we're coming back down here. We're about to find out. Now, how do you find out for FOMC if we're going to come back to 1940 or continue from 1968? Drop to the 1 hourly time frame. Let's drive the 1 hourly time frame quickly drive with me. So according to the market structure, this is a valid demand zone that we're bouncing from right now. So is it going to be a demand or inducement? Well, I'm about to find out because this was a break of structure to the upside, which you know gold normally do. So breaking that structure here turns back to the last low. So if you break this down, the market switch to the downside. So this is a change of character to the downside, which we perfectly did a ABC move to the downside on from here. ABC, completed ABC right now, making here the newest resistance zone. Yes, so we are reacting from here right now. So what you should note is that on the demand side, we are trapped in between. On the demand side, or we are trapped in between these two places right now. So anyone that breaks is where the market is going to on FOMC. I think I would like this market to break down, and the 25 basis point increase should hold. So I've entered the sale from 1970, trying to carry this move to the downside back to 1940. The reason why I'm saying that is because coming back to the higher time frame, probably the quality time frame. I'm going to show you something. I don't know, but I'm buying above 1918 already. This is the move we have right now, market structure. This is the move we're trading on right now. This was the impulse we're trading on right now. So is this just a retracement before another major impulse again? Well, what you should know is that since we're trading in between this move, we have to measure that move, 50% of that move. I'll go to 50%. I don't know, so probably I'll just use my Fibonacci retracement tools to find out 50% of that move. No, we're bouncing from 0.382. So for bouncing from 0.382, definitely we need to break above this particular resistance on the 1 hourly chart. So let's go back to the 1 hourly chart. We are bouncing from 0.382 right now. 0.382 fails on breaking this particular, what's it called, to turn into an impulse, a major impulse to the upside. That means that 0.382 has failed and it's going to take us down to 0.5. So this is what you should look at when you're trading the market. So this is going to turn into, an inducement if 0.382 fails. So this is what you should know when you're trending in a particular market. So instead of it turning into a support, it's going to be an inducement. So is it an inducement or demand valid? Okay, let me just say inducement or valid demand. I guess, and so this is what you should look out for. If it's going to be a valid demand, if it's going to be a valid demand, that means 1968 must not fail because we just have to come and test this head and shoulders pattern you see here, break the test, make it a valid demand, and continue going. But the moment you see that this, what's it called, here fails, 1966 to 1968 area fails because this is a valid 1 hour head and or valid 1 hour head and shoulders pattern that happened here. So if it's going to retest and you see a bullish sign, you can continue buying. But overall, the overall market structure is saying that we are yet to do what, come to 50%. I don't usually buy from 0.382 because I need a deeper, discount before I can start buying. So you can see that the market is dropping again. So I wanted to come to 0.5, 0.618 Q zone, take out this, you get me, this initial buy before going back up. So this is how to drive your market. I know this video is more than 3 minutes already, but whatever you're seeing here, if you can see clearly, this is how to drive your market, knowing that it might come back to 0.618. Sorry, hold on. If 0.382 fails, whenever you see a demand, it must definitely break above and continue going. Like I explained on my previous, if I should take this off, let me go to the daily. Or see the daily or the 4-hourly chart? Okay. Whenever you see a demand, if that market must definitely go, there was a demand here. There was a demand. This was what broke the structure. So there was a demand, valid demand zone here that, the entire market started, switching for that broke this particular structure. So if that's a valid demand, it needed to break above after doing a W, a head and shoulders pattern, or whatever you can call it. You can call it a W pattern break. I guess it must break above a previous resistance before you can call it a valid demand. So right now, if 0.382 is a valid demand, like I just said just now, if it's a valid demand, then we need to go above 1970 area and continue going. So if I see a valid demand retest, I need it to break above here before I can start buying and put my stop loss on that here. But if not a valid demand, know that if it fails and breaks below 1966 and retesting it and it's not breaking above it again, know that we're coming for this and turn this into this whole area into an inducement. So that's what I have for you on gold. It's as simple as that. So it's just for you to now apply risk and money management. You can see that it's coming down. So remember from my previous video, I think my 2-3 weeks video ago, I told you guys I'm waiting for what's it called, an ABC move to the downside, and this video is longer than thought out. I can do a 3 minutes video on my own. Now I told you something that I have a valid one. Hold on. I have a valid 1, 2, 3 bricks above a particular structure, 4, then 5. Then I'm expecting an A, B, C move to the downside before switching. So I'm still holding this narrative in my head. But even though I have that structural formation in my head, I also would definitely respect market structure. So I don't know if I should call this an inducement yet, but at least if it's turning out that 1966 is breaking down, just know that this market is not trending the way it should trend. I guess normally this is just normal, it's a normal trend. I guess this is just a normal trend. Continue to trend or just see. I guess this is just a normal trend. So what is happening? Look at your internal structures. They will guide you and they will help you a lot. I'm selling already from 1970. My stop loss is just above 1975, just 1975. Right, I'm risking 500 pips to see if I can cash this 1970 to 1940 or 1945. That's about 350 pips. So it's a very good risk to reward. But immediately I'm not seeing this break and I'm seeing a bullish sign. I'll take how many pips I get and take care and buy for